In this presentation, we will cover the topics of invoicing, payments, and refunds of GST. The first topic of the day is invoicing. In this section, we will cover the provisions of Model GST law and the draft GST invoice rules. Under Section 23, tax invoice should be issued by a registered taxable person at the time of supply of taxable goods and services. Section 23A stipulates that amount of tax is to be indicated in tax invoice and other documents prominently. Under an explanation to Section 23, it has been clarified that invoice includes any document issued by ISD for distribution of credit and also includes supplementary invoices and revised invoices. Proviso to subsection 2 of Section 23 stipulates that a registered taxable person can issue revised tax invoice against the invoices already issued during the period starting from the effective date of registration till the date of issuance of certificate. Under Sub-Rule 2 of Rule 4, such invoices have to be issued individually for all B2B supplies. Individual invoices are also required for interstate supplies to unregistered persons if the value exceeds Rs 2.5 lakhs. Consolidated invoice can be issued for the rest of the unregistered supplies. Rule 1 stipulates the mandatory details of such invoices. It may be noted that if the recipient is an unregistered person, it is mandatory to have name and address of the recipient, address of delivery, name of the state and state code if supplies exceed Rs 50,000. Sub-Rule 2 of Rule 1 stipulates that for a taxable supply of services, the invoice has to be issued within 30 days from the date of supply. It also provides that in case of continuous supply, the invoice shall be issued within 30 days of completion of each event specified in the contract, which requires the recipient to make any payment. In case of banking company and financial institutions, the limit of 30 days is extended to 45 days. Normally, the duplicate of the invoice should be marked for transporter. The taxable person may obtain an invoice reference number by uploading a tax invoice issued by him in Form GST INV1. The same can be produced for verification to the proper officer in lieu of tax invoice. Second proviso to subsection 2 of Section 23 provides for issue of bill of supply for non-taxable goods and/or services. Persons opting for composition scheme is also required to issue bill of supply instead of tax invoice. Rule 3 of invoice rule prescribes that a consolidated bill of supply at day end may be prepared if value of each transaction to unregistered persons is less than Rs 100, provided the recipient does not insist for a bill. Credit notes can be issued under subsection 1 of Section 24 if tax invoice has been issued, but the taxable value or tax charged in the invoice exceeds the taxable value or tax payable on the supply. It is provided that no credit note can be issued if the incidence of tax and interest on such supply has been passed on to any other person. Under Section 35(9), unless the contrary is proved, incidence of tax is deemed to be passed to the recipient. Debit notes can be issued under subsection 2 of Section 24 if tax invoice has been issued, but the taxable value or tax charged in the invoice is less than the taxable value or tax payable on the supply. The credit and debit notes can be issued only till 30th September following the end of financial year in which such supply was made, provided that the supplier has not filed beforehand his annual return for the financial year. In the scheme of things, credit and debit notes are to be issued and entered in GSTN only by the supplier and not by the recipient. Rule 5 deals with certain special invoices. Under Sub-Rule 3, tax invoices of Goods Transport Agency shall include the following additional information: gross weight of consignment, name of the consignor and the consignee, registration number of the carriage in which the goods are transported, details of goods transported, details of place of origin and destination, and lastly, GSTIN of person liable to pay tax. Under Sub-Rule 2, if the supplier of taxable service is a banking company or financial institution, then tax invoice issued may not be serially numbered and may not include the address of the recipient. Under Sub-Rule 4, for passenger transportation service, a tax invoice shall include a ticket in any form and the address of the recipient of the service may not be included. This brings us to the end of the discussion on GST invoices. The second topic of the day is tax payment. In this section, we will cover the provisions of the Model GST law and the draft GST payment rule. Under subsection 1 of Section 35, deposits of any amount by a taxable person shall be credited to his electronic cash ledger. Formats of the ledger is provided in Form GST PMT3. The payment may be towards tax, interest, penalty, fee or any other purpose. Date of payment will be deemed to be the date on which the government account has been credited. Under Sub-Rule 4 of Rule 1, Electronic cash ledger is used by persons responsible for making TDS and TCS also. Under sub-rule 3 of Rule 3, deposit can be made by internet banking, credit card or debit card, NEFT or RTGS, or over-the-counter in banks. The over-the-counter deposits are normally restricted to Rs 10,000 per challan per tax period. Under sub-rule 3 of Rule 3, casual traders, non-resident taxable persons and the like who are required to deposit tax in advance before obtaining registration will deposit the amount on the basis of temporary ID number. Such deposits will be parked in a register in Form GST PMT 5. Electronic credit ledger is maintained in Form GST PMT 2 for each registered taxable person. It is credited with ITC as self-assessed under Section 28. The balance is utilized to pay taxes. Electronic credit ledger cannot be debited for payment of the following amounts: TDS under Section 37, TCS under Section 43C, tax payable under RCM, composition tax, interest, penalty, fees, etc. Under the provisions of Section 35, CGST credit cannot be used for paying SGST and vice versa. Further, IGST credit has to be used for paying IGST, CGST and SGST in that order. Also, CGST and SGST have to be first applied for payment of CGST and SGST respectively before applying the same for payment of IGST. Next comes the Electronic Tax Liability Register. Under sub-rule 2 of Rule 1, the ledger can be debited by self-assessment tax as per return filed, tax etc. as a result of adjudication proceedings, liability due to mismatch of transactions, and interest from time to time as applicable. Subsection 8 of Section 35 provides the following chronology of tax payments: dues of previous tax period, dues of current tax period, and lastly, other dues. Section 37 deals with deduction of tax at source. A department or establishment of government, local authority or governmental agency and other notified persons may be mandated to deduct tax at source. Value of supply of notified goods and services should exceed Rs 10 lakhs under a contract for attracting the TDS provisions. TDS has to be made at 1%. The amount so deducted has to be deposited within 10 days of the end of the month, and a return has to be filed giving details of the deductions. Tax collection at source has been stipulated for e-commerce operators under Section 43C. The operators are liable to collect tax at the time of payment to suppliers. The amount so collected has to be deposited within 10th of the end of the month. A return has to be filed with details of transactions on which TCS has been made. The last topic of the day is tax refund. In this section, we will cover the provisions of the Model GST law and the draft GST refund rules. Application for refund of balance in electronic cash ledger can be made through the returns in GSTR 3, GSTR 4 and GSTR 7. On submission of an application, an acknowledgement will be generated in Form GST RFD 3 in terms of Sub-Rule 6 of Rule 1. Casual traders, non-resident taxable persons and the like can apply for refund only after filing their last return. Application for refund of any tax, interest, penalty or any other amount paid can be made within 2 years from the relevant date. Under Rule 1, the application should be made in Form GST RFD 1, enclosing therewith the applicable documents. Under Section 38, Subsection 3b, a declaration by the applicant is sufficient if the refund is for less than 5 lakhs rupees. Rule 3 stipulates debiting the electronic credit ledger if the application relates to refund of input tax credit. The ledger will be recredited if there is any deficiency in the application or if the refund claim is rejected. Refund of unutilized ITC can be claimed under two circumstances. Firstly, the goods and services are being utilized for export on which export duty is not payable, and secondly, the rate of tax on inputs is more than that on output. If goods are exported without payment of tax under bond or letter of undertaking, net ITC refund will be in the proportion of total export turnover of goods and services to adjusted total turnover. No refund of ITC will be granted if duty drawback has been availed or tax rebate has been claimed. On receipt of the application, the proper officer will acknowledge the same in Form GST RFD 2 if the application is complete. Else, he will issue Form GST RFD 3 to the applicant requiring that he files the application after rectifying the deficiencies. Refund is required to be granted within 90 days of submitting complete application. Refund will be credited to Consumer Welfare Fund unless the claimant proves that he is eligible to receive the refund. Claimant will be eligible for receiving the refund only if the refund is a refund of tax on goods or services exported out of India. Refund is a refund of tax on inputs used in goods or services exported out of India. Refund is unutilized ITC because of tax rate on input being higher than output. Refund is due to tax etc. paid by the applicant and the incidence has not been passed on. Refund is due to other notified class of applicants. Under Section 4A of Section 38, if the refund is towards exports, government will notify categories of taxable persons in whose case 80% of the refund will be released provisionally, remaining 20% will be released after due verification. If the applicant fulfills the conditions of Rule 2, the proper officer will issue Form GST RFD 4 for refund within 7 days of acknowledging the application. Under Sub-Rule 1 of Rule 3, after examination of the application, if the proper officer is satisfied that the refund is due and payable, he will issue Form GST RFD 5 sanctioning the refund, mentioning therein the refund already given on provisional basis and amount being adjusted against any outstanding demand. If the entire amount is adjusted against arrears, then the officer will issue Form GST RFD 06 to indicate the same. If the applicant is not eligible, the officer will issue Form GST RFD 7 requiring the applicant to show cause within 15 days and provide a reasonable opportunity of being heard before deciding to approve or reject the application. Persons holding unique identity number are required to apply every quarter in Form GST RFD 10 with a copy of the GSTR 11 filed every month. The refund shall be granted for invoices having minimum value of Rs 5,000. That brings us to an end of today's discussion on invoice payment and refund. Do like the video to encourage and do subscribe to my channel to stay up to date on the happenings in GST. Have a nice time.